Hello, my name is Mel Holsworth from Holsworth Law & Associates. I appreciate you clicking onto this and viewing this presentation on self-managed superannuation fund trustees. We're a firm of accountants, tax agents and self-managed superannuation fund specialists. Just a little bit about us first. We were established in 1978 and we operate down in the southern suburbs of Brisbane, though we have a client base scattered all around not only southeast Queensland but around the whole of Australia. We currently have 12 staff of accountants, tax agents and SMSF specialists, and also administration staff that form part of that 12. Our clients are mostly small business clients and self-managed super fund trustees. We're happy to give them all a personal approach. We like to do service with a smile in a timely manner, and be aware that because we're in the suburbs we're a little bit more reasonable in our fee base than some of our big brothers that are up in the city area. Just the normal disclaimer pointing out that this is advice of a general nature. It's not specific advice to you. It doesn't take into account your own investment objectives or financial needs, and of course you need to make and get targeted advice relating to any financial decision that you make, and we would appreciate you contacting us in that regard in the future. This information is current as at the date of this presentation in March 2011, and of course the taxation and the SIS laws are always apt to change, and so you should seek current advice before acting on this. So the agenda of this presentation is dealing what is the role of a SMSF trustee, whether you should incorporate a company or use individual trustees, what's the best in your situation, what is the appropriateness of making changes to the trustees after one has been appointed, and you may move to another later on, and then we'll summarise it all at the end. So just be aware that self-managed super funds are trusts by way of entity identification. They come under the trust law and trust legislation. They're governed by and in accordance with the trust deed. Trustees are the legal entity of any trust, and likewise with a self-managed super fund. You'll see this noted on the bank statement, will be the name of the trustee. You'll see it noted on all the investments that the super fund makes. You'll also see it on any loans if your superannuation fund also gets involved with limited recourse borrowing within the fund. The trustees must be fit and proper persons. They have to meet some criteria. They have to be of legal age, in other words 18 years plus. They cannot be in bankruptcy or in any type of administration order, and they cannot have committed an illegal offence of a dishonest nature. And so honesty and integrity is integral. If corporate trustees, of course, they've got to meet the fit and proper persons under the ASIC legislation definitions. So just a couple of rules relating to trustees. The fund must have fewer than 5 members, which means it can have no more than 4 members, and all members must be trustees of the company. So each trustee is a member and each member is a trustee, and if a company is used, then a member has to be a director of the company. The term member is the person who owns the money in the fund, and so there'll be a number of members and they'll have different member accounts, in other words different financial interests or different savings that are within the superannuation fund. And whether it only be a member with $1 in there or a member with $1 million, they're both appointed as trustees and have equal voting rights. No member can be an employee of another member unless they're a relative. No trustee can receive remuneration for their duties within a superannuation fund. They can be reimbursed for expenses incurred, but they can't be paid for their duties. There are some limited circumstances where, for example, in my own circumstance, as an accountant, I can provide professional services to my self-managed super fund and charge the fund for those professional services which are done by me. Those services have to be done in a reasonable manner, and the charge has to be a reasonable charge, but I personally choose my discretion in not charging the superannuation fund for my professional services. because I would prefer to keep the money in the fund rather than having come out to me or to my accounting firm as taxable income. But under normal circumstances, the trustees are not remunerated for their services. They can be reimbursed for expenses incurred, out-of-pocket expenses like buying the financial review or paying parking or attending conferences where they're out-of-pocket, and the super fund can reimburse them for those costs, but they can't be paid for their time and their effort. And there are some matters relating to legal personal representatives, such as minors, members travelling overseas, and powers of attorney being used in relation to accidents and ill health. This really isn't the avenue in relation to LPRs, legal personal representatives, but it is possible for a minor, someone under the age of 18, to be a member of the superannuation fund and have a legal personal representative, in other words someone over the age of 18, represent them as a trustee. And it is possible to have powers of attorney appointed if members are moving overseas or in the event of an accident or ill health. So let's have a look at the matters pertaining to appointing a company as a trustee. A company meaning a proprietary limited company. This is a private company. It's not listed on the Australian Stock Exchange. There are a number of persons that I have as clients who use companies as trustees, and so they'll be looking at in the company structure. We'll be looking at individually what's good for a company, and as against individual trustees, how to change it, and I'll summarise the company trustee at the end of it. So there'll be a couple of slides on company trustees and some on individual trustees. So, for a company to be its trustee, the company must have its sole purpose as its responsibility as a trustee. I always recommend to clients that companies should have their only purpose as being the trustee. They shouldn't trade in any other area. We would not like a company's financial difficulties in its trading in another area to come back and become a problem as it holds its responsibility as a trustee of the self-managed super fund. And so we're really worried about cross-contamination or cross-litigation issues between different businesses of the same entity. So the recommendation is to always have the company acting in its capacity as the sole trustee and doing nothing else. Of course, companies are very positive in that it's possible to have a company with one member, and as I pointed out, each member is a trustee. So in this instance, with one member, there can be just one director of the corporate trustee. One of the peculiar laws still in place is that if you're going to use individual trustees, you must have a minimum of 2 individual members with 2 individual trustees. But if you have a corporate trustee, you can just have one member with one director of the corporate trustee. This becomes especially positive in the events of when a member is exiting the fund or in the death of a member. It's far easier to hold on to that minimum of one in those circumstances. Certainly also when a member is exiting the fund, you don't have to go around changing all the details of the assets, because the assets will show the company as trustee. It won't show the individual directors on the documentation of each of the assets. And so when members exit or pass on, certainly we don't have to go around changing all the documentation relating to assets and liabilities. Of course, there are costs associated with setting up a company at the onset, and so those costs have to be borne. There are annual renewals to the Australian Securities Investment Commission, to ASIC, each year that have to be paid. They're not very high, but they're an annual cost. And of course, when directors change their personal circumstances, their addresses and what have you, these changes have to be made with ASIC along the way as well. So yes, there are some costs associated at the onset and annual costs associated with having a corporate trustee. Now, with individual trustee, there are absolutely no costs at all associated with setup of the superannuation fund with individual trustees. The only cost, of course, is the setup of the superannuation fund. No costs of trustee. It's interesting that over 70% of self-managed super fund trustees around Australia are individuals, and so it's very popular to have individual trustees. Just repeating again that when you have individuals as trustees, you must have 2 individual trustees, which means there's a minimum of 2 members as well. So 2 members, 2 individuals, but remember, maximum of 4. You cannot have greater than 4, or in other words, less than 5. Trustees in these circumstances have unlimited liabilities in that any litigation that's set towards the superannuation fund is passed on immediately to the trustee, and if the assets within the superannuation fund are insufficient to meet the debts of the trustee, then this has to be looked at seriously, because the trustee's personal assets can become into play in order to meet those debts. And so if the trustees are investing in assets, for example direct property or commercial property, where litigation could pass as a result of holding that asset back to the trustee, it would be my strongest recommendation to have a corporate trustee and not have individual trustees. There are difficulties in relation to individual trustees when members exit or the death of a member, remembering that the individual trustees' names are listed on each asset, not only the name of the fund but the individual trustees' names, and so all of these would have to be changed with the exiting member's name taken off, or a new member coming in name would have to be put on that asset. So a bit of an administration issue there, getting around everything. Yes, it is possible to change the trustees in most instances during the life of a self-managed superannuation fund. The trustee will show those details as to how trustees are to be changed. I haven't seen a trustee yet that has not allowed the trustees to change, but one would have to look at that closely. Once again, the assets will have to be changed over when trustees change, and so changing a trustee from an individual to corporate or vice versa, one would have to go around and change all the details on all the assets, including the bank account. And of course, when changing from an individual trustee to a corporate trustee, the individual trustees must also meet the fit and proper person criteria as set down in the ASIC regulations, along with the normal SIS regulations of being a fit and proper person. In summary, trustees have wide responsibilities and duties. They're set down in the trustee, also in the trust legislation. Trustees also are legally responsible for the debts within the superannuation fund. They cannot be paid for their duties acting in their capacity as trustee. They have unlimited liability, and so where you have circumstances where you think that some litigation could pass out of the assets of the fund to the trustee, it would be prudent to have a proprietary limited or a corporate trustee there in order to buffer that liability. It is costly to make some changes after the establishment, making changes to trustees, especially if direct property is held, because it involves making changes to the titles office. Certainly there are 3 staff here, myself, Scott and Heather, who can be contacted if you have any queries relating to your trusteeship, or if you're looking at setting up a new self-managed superannuation fund. You can speak to any of us in relation to the setup of that superannuation fund here at Holsworth Law & Associates. We can be contacted on 073808 2868, or my personal mobile is 0411 597 678. We have a very progressive website which is listed on the screen, which gives lots of articles. You'll also see a Twitter and a blog account associated with that website, and we update all of our self-managed superannuation clients via the blog. We're constantly putting articles on there, not only dealing with self-managed super funds but also general tax advice, because we are accountants and taxation agents as well. If you have any questions, as I said, contact us. We'll be very happy to help you and assist you at this time. Thank you very much for listening.